Okay, so quick question for you. How would you feel if somebody handed you 50 bucks literally just for existing? Like, you didn't have to work for it, you didn't clock in, you didn't post some fake guru course on Instagram hoping that your friends would buy it, just boom, money in your account. And now that's literally dividend investing. I get paid every single month by companies like Johnson & Johnson and Coca-Cola, and all I had to do was buy a few shares and literally just chill. So if you're into the idea of getting rich slowly, like the kind of rich that actually stays, well then make sure you buckle up because this might be your new favorite obsession. So let's rewind to a few years ago. I mean, I was burnt out, I was overworked and very into the idea of financial freedom, but I had no clue how to actually get there. I thought I needed to start a business, hence YouTube, go viral, hence YouTube, or become the next Warren Buffett overnight. And it turns out I just needed to buy boring stocks that pay dividends. So I decided to start small. I bought one share of a dividend stock. I think it was Verizon, and it cost me about 50 bucks at the time. And a few months later, I got my first dividend check. 37 cents. And I literally lost my mind, not because of the amount, but because of what it meant. That was money that I didn't trade for time. It was true passive income. Now, if you're new to all this, here's the deal. A dividend is a payment that companies give to shareholders, aka people like you and me, just for owning the stock. Think of it like this. You're part owner of the company. The company makes a profit, and instead of keeping it all, they say, hey, here, shareholder, take a slice of this. And then boom, that's your dividend. Most companies pay quarterly, some pay monthly, and the more shares you own, the more you get paid. It's like building your own little paycheck machine, just one stock at a time. So the question is, why don't more people do this? And to be honest, it's because dividend investing is extremely boring. It's not flashy. It's not going to make you 10x your money overnight, like some crypto token or meme stock. You're not flexing dividends on Instagram with a rented Lamborghini and a quote about a side hustle. But here's the plot twist. That slow, boring path, it's how true wealth is actually built. Warren Buffett, I mean, most of his wealth didn't even show up until after he turned 50. Dividend investors play the long game. We reinvest those tiny checks, we buy more shares, and we let time do the rest. And eventually, those 37-cent payouts turn into hundreds, thousands, tens of thousands of dollars without us even doing anything extra. But here's where it gets really interesting. You see, most younger investors are told to focus on growth stocks, companies that might not pay dividends but are expected to grow super fast. And sure, growth investing, yeah, it does work, but honestly, what's weird is I've seen better returns with dividend investing over the long run, especially when you factor in consistency, reinvestment, and the compounding growth that these have. The difference is dividend investing rewards you while you wait. You're not just hoping the stock price goes up, you're actually getting paid along the way. And the secret weapon to all of this is just reinvesting those dividends. You see, every time that I get a payout, I don't cash out. I use it to buy more shares, and that's called compounding. It's like building a snowball on a hill. At first, it's going to be extremely small, but then it starts rolling and picking up more snow, and AKA that's money. And pretty soon, it's massive. The more you reinvest, the faster your portfolio grows, and you're not even putting in any extra money. That's what's so crazy. And if you really want to supercharge it, here's a cheat code. You do it inside of something called a Roth IRA. Because when you invest in dividend stocks through a Roth IRA, every single dividend that you earn is tax-free. That's right. All those quarterly checks, you keep 100% of them. And when you sell those stocks decades later, it's still tax-free. It's one of the biggest financial loopholes that regular people can actually take advantage of. So I make it a point to max out my Roth IRA every single year, and I load it with a dividend-paying ETF and stocks that I plan to hold forever. So let's actually just run some numbers real quick. Say you invest $1,000 into a stock that pays a 4% dividend. That's $40 a year. Now, I get it. It doesn't sound like much, but imagine if you just keep adding to it. You invest a little bit each and every month. You reinvest every dividend that you're paid. You let compound interest quietly do its thing, and 20 years later, well, you've built a portfolio that throws off thousands in passive income every single year. Money that doesn't only cover your bills, it can also cover your groceries, your rent, anything that allots you to financial freedom. It's insane. So here's exactly what I do. Every single paycheck, I invest a little bit into dividend-paying ETFs and individual stocks. Some of my favorites are SCHD, which is full of strong dividend companies, VTI, which technically isn't dividend fund, but it still gives you exposure to thousands of companies. I invest in like really solid companies like Johnson & Johnson, Procter & Gamble, Realty Income with the ticker symbol of O, literally just the letter O, And here's the real trick. I turn on DRIP. That's the dividend reinvestment plan. It means that every dividend I get is automatically used to buy more shares. It's like setting up your investments to actually invest in themselves, and it's on total autopilot. But here's where people tend to mess up with dividend investing. They chase the high yields. Like, whoa, this stock pays 12%. Hell yeah, I'm in. But usually a red flag. If a company is paying a 12% dividend, it might be because the stock is crashing and they're trying to keep investors around. Or high yield doesn't really mean that it's a quality high yield. And what you actually want is reliability. You want steady companies, decades of dividend history, businesses that survive recessions and still send out checks, the kind of companies that are boring on the outside, but they actually make you richer every single year. You can find lists like Dividend Kings and Dividend Aristocrats online. These are companies that have consecutively been increasing their dividend payments every year for the past 25 or 50 years respectively. And it's just a really solid spot if you're looking to get into dividend investing and you're honing on the side of wanting to invest in individual stocks. Now, if you're just starting, I tend to stick more towards ETFs. It's way less of a thought process for you. You can automate all of your investing, and it just makes it a little bit easier. It keeps you honest and investing more in the market. And look, I mean, the thing is here, I'm not claiming that I make 10 grand a month from dividends, but not yet. I mean, I will one day, but every time I get that notification, you've received a dividend payment, I literally smile because I know that I'm building wealth without having to hustle any harder. It's not about timing the market or getting rich quick. It's about consistency. It's about being smart and watching your money and giving it the space that it needs to grow. Now, here's the crazy thing. You really don't need to be rich to start. I mean, I started back in college with just 50 bucks. You just need time, patience, and the willingness to let boring be beautiful. So if you want to build a stream of income that pays you for doing literally nothing, then hit subscribe. I'll show you how to turn your portfolio into a paycheck, one dividend at a time. Now, I get it. It seems really overwhelming, but let's say you don't have a lot of money. Here's a video that tells you the impact of investing just $1 a day, and it could turn into millions of dollars pretty easily. Check it out.